All right. Hey, thanks, Scott. I'm assuming everybody can hear me. Otherwise, I'd be probably hearing about it at this moment. So thanks again for the tuning in of the Wednesday evening Trade of the Week webinar. There's a lot of things you guys could be doing after market, and I always appreciate the turnout that we get here. It's one of our more popular webinars during the week. Before we get started, just the typical lawyer speak. We're not a registered investment advisor. Trade Ideas is not a broker. We are not giving advice. None of the things that you hear on here should be considered as advice for investment. If you need that kind of advice, you got to seek a professional broker or RIA, money manager. So just once again, we are a content publisher. We are not recommending any particular investment securities. All right. Just a quick reminder, you're not alone with Trade Ideas. We've got the live trading room every day, which has over 370 people now, I believe, attending regularly. And a lot of good stuff in there in the first half an hour. And I'll kind of tie into that with one of the alerts I want to talk about here and go back in time a little bit in the first half hour of today's trading to try and show you guys how some of these alpha movers can really be caught and how we're catching some of these as well as the live trading room. Myself and Jamie on Mondays and Thursdays do a 2 o'clock Pacific, 5 o'clock Eastern webinar focused on trading. You had the question and answer webinar earlier today with Dan and Brad, and then of course the evening webinar as we are right now. But what's not on here is the great education and hand-holding that we have in terms of when we bring on board a new user. A lot of these new users have different ideas in mind. They have different methods they're looking for. They have different goals in mind. And so it's a great way to take advantage of what we offer, which is the 1 hour of power with myself, Jamie, and soon to be here, Andy. And it's a great way to go one-on-one, share the desktop, get some real good special time, and put together, a layout, help you with your layout, help you with some ideas to get you in the right direction. Because again, trading's not a science; it's an art form, and everybody approaches it differently. So, having that 1 hour of one-on-one instruction is really a valuable tool, and we're getting awesome feedback on it. So, going forward, keep that in mind if you haven't done that yet. That is still available to you. We'll talk a little bit about the AI upgrade features in terms of exit upgrades. There's a few new features that Holly's been using to try and maximize and manage her risk. We will definitely touch on that. And just kind of a typical Wednesday night here, we'll do a quick market recap. It's been a very noisy, difficult market for many for a few different reasons. Holly had a quiet day, but some very interesting trades and a great demonstration of some of the new risk management tools that she does have. So excited to talk about that as well. The Trade of the Week recap, which is ETSY, it's still intact. It has not been stopped out, but it did have a difficult, rocky start. We'll talk about that. The Alpha Predator window is probably our new favorite window that we've been using for the last couple weeks, and especially in the live trading room, as I mentioned. This thing is spitting out some really interesting stuff for the people who like to jump on the high alpha movers in the first half hour of the market. So we'll dig into that. We'll talk a little bit about how we use that, and then we'll of course set some price alerts as usual. So with that said, let's just kind of go right into the market recap. And to do that, we're going to use the SPY. So again, you're listening to myself, Steve Gomez. I am user number 3 in the Trade Ideas system. And let's use this opportunity to say hi to Andy, who is number 40 user in the Trade Ideas system. So we've got a couple of old school guys here tonight. Hey, Andy.
Hey, guys. Hey, Steve. How you doing? Glad to be here.
Good. Glad to have you. So this is the same chart that I've left up for many, many moons as we talk about the trading range that we are in right now. And we are essentially right smack in no man's land in the middle of the trading range. Last we spoke, this little gap here was meant to be filled and certainly was filled last week. Forgot which day this was, but a nice bounce off of this lower level here. And so our range continues to be 211.60 to roughly 205.50 in the SPY. Now, we do have some action in the overnight markets, and, let's just highlight on these last 8 or 9 days here. I mean, a lot of gaps, a lot of big true ranges from high to lows, a lot of wicks, a lot of reversals, a lot of red candles after gap ups, a lot of green candles after gap downs, just a lot of craziness. And again, this is being directly attributed to, who knows how much, in fact, is reality, but the British exit, the Brexit news, which apparently is going to be, I guess, come to a culmination tomorrow. And so this is where we last left our market this morning. But for those of you who don't have a futures account, I'm going to show you a little trick here. We have a website called investing.com. And when you get to investing.com, you just want to find your way to charts, futures charts, real-time futures charts. And then it opens it up here in an Adobe Flash window, and you have the ability to look at gold, oil, some other things. So we basically go to majors here, and I pop in the E-minis, the S&P 500 futures. And if we just pop this into a 15-minute, we can see that the fun and games is continuing. Here's where we went out this morning, and we had some more polling numbers coming out of England again, and popped the futures right back up. So we're still in the same vein here of the gap up, gap down, chutes and ladders, high volatility. But if you're one who likes to monitor the overnight markets and you don't have a futures account, investing.com is a great hack. You can go in there and for free you can get a quick look at how the futures are doing. So that brings us back to where we are. We're probably going to open maybe back up here again tomorrow with another gap up. But I do not have a bias at the moment. I do not have a directional feel. We are just right smack in the middle of this range in no man's land, sprinkling in a lot of overnight volatility and gaps. What are your thoughts, Andy?
Exactly the same thing. As a matter of fact, I remember one point today, this morning, I had put on, I think I had probably about 4 or 5, maybe even 6 positions at one time, and they were all pretty decent positions and and then they were all working for me. And then all of a sudden, the bottom just fell out of the spiders. I'm not sure why, but it's the kind of action we have now. And instead of I just hit the bell. I mean, I sold everything just in the blink of an eye, just because I didn't even want to mess with it. It's been very difficult lately. It's either swing trading, day trading, whatever kind of trading you're doing, position trading. It's just a very tough market. And as Steve was mentioning, all those gap ups, and even when you see the gap up and you have the red bar and closing on lows, don't think that was just one solid move all day down. It was probably back and forth action, close to highs, close to lows, back close to highs again. These are the kind of markets where we sometimes overuse the term sit on your hands, but there's just not a whole lot of edge right now, and Holly can testify to that.
Yeah, I know why the markets did that on you. Andy was talking about right here today. In fact, just look at this.
Oh.
Look at this. Yeah, if you want to look at this, a 15-minute chart, gaps galore all over, rips back and forth. But yeah, what was happening again here? Market was having a nice cruise higher, and then another straw poll came out showing maybe a possible exit from the euro. And so the market got scared again, and then we get another stupid poll after hours that says, well, no, it's looking better now. And then we gap back up. So, I mean, I don't have to continue to go on and beat a dead horse here to try and illustrate the absurdity of what we've got right now. And it is what we've got. We've been in these types of things before, and here we are again. And so until we get this sorted out, and until this trading range shows itself between, these two levels, we could go either way. So, keep your powder dry, keep your cards close to your chest. And I want to add one more thing here, because this morning, let me go into presentation mode here. This is our turbo breaks up and turbo breaks down window, and I'm gonna use this as an example and also share this with people, because I think you'll see the wisdom in this technology piece of trade ideas. This was taken at, I believe, 6:53, which is 9:53 Eastern. I'm on the Pacific time, so is Andy. So a snapshot about 25 minutes after the market had been open for 23 minutes or so. This was the best that we had to look at. 51% of the tickers coming through called the turbo breaks up, which I will show you, compared to the 49% activity on turbo breaks down. So essentially, just a wash, a statistical wash. There's no real edge. What we like to see sometimes in a directional market is maybe 60-40. 60-40 is a decent one. Maybe 35-65 would be a real nice extreme reading. But using this compare count window and the early going of trading can really give you an idea of what might be ahead, for the market. And as we get close to the top of the hour each day, we usually have a pretty decent idea of, what the flavor is until the 10 o'clock data starts to come out. But I want to illustrate one more time, if you're not using this compare account window and glancing at it in the first half hour of each day, you're kind of missing the story. And today the story was, yes, once again, there really was no edge in terms of directional edge. And I'm going to dive deeper quickly into here to how to create this compare account window, and then I will share it as well, because I know that's going to be the following question: how do I get a copy of that? You hear myself, you hear Andy, you hear Jamie, you hear Dan especially use the words, it's statistically noisy. It's really statistically noisy right now. And we just looked at that in the candles of the spiders. But, here's a guy that I just want to show you that it's not just the guys that trade ideas constantly saying that. This is Steve Place. He's a great trader in terms of options. If you like options and you want to learn about trading options, Stephen Place is a great guy to follow. But here he was today, just kind of echoing what we've been saying. So I had to screenshot that and pop that up here. A real good respected guy in Twitter finance just saying the same thing. This market has been statistical noise all week, and then I'll include last week as well. So what is this compare account window, and how can we make it work? So we'll just spend a little bit of time on that. And right now it's dead because it's after market hours, and I've probably turned my machine off. And just to let you know, this is the kind of window you want to let run. If you go to a channel and you come back to your default layout, this window is going to restart. So this is the kind of window you might want to pin to make sure it's always there when you're changing channels. But you want to let this thing run as long as you possibly can to soak up the ticks and see how they're coming through. And what this is doing is it's comparing the counts between two strategies, turbo breaks up and turbo breaks down. So real quickly, if I go into the configure of these, it's already been configured. But what we're doing is we've got the green data. We basically load a green data uptick type strategy, and then use hopefully a similar type of flipped pattern on the red data. And in this particular one, rather than configuring our own, we're using what's called the collaborate feature. And real quickly, the way this was built was using the collaborate feature. And so let me quickly go to my, let me cancel that so I can go to my cloud. And if you haven't seen these in the past, they're called turbo breaks up and down, and it's a really interesting momentum type scan. There's turbo breaks down. Let me load that. And I'm going to load turbo breaks up, just so I can kind of show you how this window was created. So if you wanted to build your own window, you could do so. There's a copy of turbo breakups. Okay, so these are essentially looking for explosive volume. If we configure it, we can go in there and quickly see. We want to see something that's having good 1 minute explosive volume. That's really all it's looking for. Stocks go into highs, making 1 minute big marks in the 1 minute volume. It's as simple as that. So if we take these two strategies, we use the cloud a lot, but the predecessor to the cloud was called the collaborate feature. And so in any window like this, you can go in, and the collaborate is right below the cloud. What I just did is I basically saved all of the settings to be loaded into another window to add to or to create, some sort of, compare count. So what I would do is I would copy the collaboration. I would go in here, and in the configure on the green turbo breaks up, we could basically use the collaborate, paste all, and that's exactly what I basically did. So we would do the same thing for turbo breaks down and get us a real good count of what is winning the battle, the green turbos or the red turbos. So that's the genesis behind how to build that window. And just before I move on, I will certainly be happy to share this for those who find value in it. Let me save and share. So what I do is when I'm copying things here for you guys, I will just drop them into the chat window, which is on your toolbar at the very bottom. I've got my bio in there right now, but I'm going to drop in, and I will label it compare account window. Paste. All right, so you've got the compare account window, something that is very interesting to use in the first half hour of the markets for sure. So where are we on my, let's go ahead and just go into the Holly recap today. So we'll put that back, and if you want a copy of it, it is collaborated down there and shared in the cloud in the chat window. So only 4 trades today, which again is in the same vein of statistically noisy. out there. Holly was up 24 cents, but this really doesn't tell the story because we've got a couple of other things to kind of highlight here. There are some new exits. The profit save was one that kicked in today, and I want to talk about the profit save. Basically, it's another way of saying trailing stop. Once a trade goes profit to a certain extent, a certain percentage, there's an algorithm involved here. Once that trade goes profitable for Holly, essentially, and passes that threshold of that first level, a protective stop, trailing stop, is raised and put at that level. And the idea is to not see good green trades roll over and go red and demonstrate good risk-reward management. And so what happened today was a kind of interesting thing. We only had 3 strategies short and 1 strategy long, which I haven't really seen that kind of a mix recently. But for the most part, the whole day was quiet because, once again, compare count window, as I showed you, there wasn't much of a statistical edge. Holly was not really seeing any trigger points based on the base strategies that were deployed today, or on the bench, I should say, because as you can see here, only 2 strategies were deployed. The Bollinger reversion scalp and 1 long trade support is that U. The other 2 did not fire. But we had an interesting event today. Actually, Andy wrote me in the middle of the day and said, why the heck is IVB spiking? You know, rarely will you see an ETF unless it's just a single energy ETF. But an ETF that encompasses numerous different companies like the IVB does, rarely would you see a spike like that. And it was kind of unusual, and it took a few minutes, but it turns out it was healthcare-related news that was coming out that was obviously going to be favorable, apparently, to the biotechs. But what happened is something interesting, is it triggered a great example of what Holly does that we can't always see. This particular Bollinger reversion scalp is it's based on using intraday Bollinger Bands. So when a stock gets way outside of its Bollinger Bands, outside of a standard deviation or 2, usually we're going to have a reversion to the mean. And so this particular strategy has done a good job of identifying a window in time and a good hold time to basically jump in front of these giant moves and fade them and go short. Now, being a human being, seeing these types of moves, probably not, the first type of thing that comes to mind is to jump in. And where do I jump in? But Holly had some interesting trades today. The first one at 7:33 Pacific time. This was the first one as the news had come out. And here's the arrow indicating the giant green, and the entry price, I believe, was 43.20, which is indicated by this blue tag right here. So a bit early on the first strategy, and Holly was stopped out for 25 cents. However, you can see the trade did eventually work and roll over, but she took us 25-cent hickey on that one. The next one was a few minutes later, and so some of these things are maybe starting to settle down a little bit. Well, for whatever reason, DVAX, let's click into that. Once again, a nice move up here, but an arbitrary, to the human eye, would seem arbitrary, but it's not. It's based on statistics and backtesting and more backtesting and optimization, trying to find out at what point do these things get to a overstretched rubber band and look to have a quick reversion to the mean. And that's the exact idea behind this particular strategy. In this case, it was a great entry, 1540 right up here. Not too much more to the upside to worry about shaking us out of the shorts. But then a little bit of noise that came in, and that actually triggered that profit save that I talked about. So Holly essentially took a 13-cent winner, but the trade went on to make 57 cents into the close. So this is a great moment to remind everybody that Holly is not a black box. It's not green, red, do whatever she does. The main value is in the idea generation. She presents an entry and an idea, a trade generation in real time to you. And to put it bluntly, how you exit is really up to you. Holly has to get out at the end of every day. You don't have to. There's some cases where if a stock closes on highs and you're long and you want to get some follow through, there's absolutely no reason as a trader you maybe shouldn't be taking some profits but leaving some on the table for some additional movement. And so here again is a great example of something that you probably wouldn't see with your own eyeballs and your own methods, but the behind the scenes data indicates that these things were stretched out, and the way these things tested, more often than not, it was a reversion to the mean for a decent hold, and that's exactly what happened with DVAX. Same thing, same scenario, same time of day, another biotech, and this one was really nailed by Holly. It was a little bit later than the other 2, but 40.49 was a short, basically caught really the top of this this topping tick right here. Never really much pain at all, But once again, because of the back and forth nature, the trailing stop profit save did trigger on Holly on that one for a 25-cent book on her P&L ledger, but the trade really did generate, $1.38 or $3, 3.41% return on just holding that one. So, a decent little grab bag of good examples today for Holly to show you how, it's not the typical patterns that we look for. Sometimes we can't see through the forest, through the trees, and through all the noise, but she sure could, especially with this particular trade, going back with that Bollinger reversion scalp. As you can see, it actually came into the day with a decent 69.8 win percentage. And just so you guys know, if there's any statistical junkies out there that are saying, well, are you guys curve fitting this data? And by curve fitting, that means taking the data sample and tweaking every single filter you can until it looks just the way you want it to. Well, that's not what we necessarily do. What Holly does is take two different data samples, an in-sample and an out-of-sample data. And on the first one, it's like a big chunk of 70%, and the other 30% is put away to the side and not touched, not configured, not optimized, not touched. That's to be held for the final testing. And so the first 70% of data goes through the optimization and the back testing and the tweaking. And once a strategy and the filters are set the way Holly wants them to be set for the evening, then that strategy is moved over to the out-of-sample data and directly injected into, for lack of a better word, a virgin 30% of data that hasn't been touched. And that is the score that is essentially taken and displayed here on the left-hand side. We call that out-of-sample data. So in case anybody was wondering about that, that is kind of the regiment that she goes through to make sure that there is no curve fitting going on in that. So only a few trades by Holly today. Let's take a look at this long one because, I want to try and define this. This one's called Support Is That You over $20. Well, the over 20 makes perfect sense. Support Is That You. Let's try and take a look and see what exactly is being done here. And I like these kind of strategies because they're contrarian. Here's our entry. Here was our support, our prior support from a few days ago. So Holly is seeing a stock that's probably most likely up on the daily. That's exactly right. So position and year range is probably up there pretty high, making it known that this particular strategy is not something that's bottom picking a 52-week low. It's working with something that's pulling back to levels of support, but is continuing to move up in a nice range for the 52 weeks. So looking over here on our 15-minute chart, it just becomes kind of obvious that what we're doing on these is looking for levels of prior support. And for those of you who follow price action closely, you are perfectly aware of how the price action tries to shake us out, lift up the curtain below obvious levels of support, and see if they can run any stops, and then we get some bounce. Well, that's exactly what this strategy is looking for. It had a decent little setup. Basically, it got long in this area right here as it got close to support. But then Holly, it looks like, took the same exit again, the profit save. What was once in the money started to roll back over and head back to zero, so a profit was taken on that one. And that actually worked out because the stock did go lower eventually. All right. Moving forward, any comments on what I'm talking about over here, Andy?
Yeah, I would just like to say these reversion, these contrarian moves calls by Holly, they're some of my favorite. Because essentially what you're doing, especially on these, if you want to put back up DVAX, because that was more extreme, and you have to be careful because it did have some volume coming in, into the IBB, but the herd is chasing. You got short covering going on. It had a huge move from 1450 below 1450, all the way up. Almost a 10% move there in 10 minutes, before Holly faded it, and those are they're contrarian, and I love it when she calls those out because either direction. Now, when I play them, I know I have to be careful because you are kind of stepping in front of a train, but that's why you want to do it with small size. You have to obey your stop loss in case it does just continue. But boy, when you do hit those, they can be very nice, paying trades there. But I always like the contrary ones because I'm kind of a contrarian in a lot of ways. I like to go against the crowd, against the herd. But
well, that's kind of what works in this noisy market.
Well, yeah.
Let's talk about that. It's a great segue, contrarian. Let's take a look at our trade of the week. let's start off why we picked it. Etsy. For those of you who have been following along with the trend change lubricant, these are the kinds of stocks that we're trying to identify. You know, Pandora was a great one, called back here for the trade of the week, had a nice run, but we're not necessarily picking stocks that are going to 52-week highs. You know, that can work, but on the flip side, when those decide to hit the sell button, they kind of drop the floor out from underneath you, and you can get some really quick down moves. But back to our Etsy here, you can see the green line that was basically established looking for a pivot point of a stock that basically opened its IPO at 30, all right? It's been suffering ever since, skipping along the bottom, kind of a double bottom here and here as I zoom in a little bit, then starting to create some higher lows, higher low, higher low, higher low, higher low, higher low. And this identifiable area comes into play here, and it was basically right above the $10 level. And so what we decided to do for this particular week was not just come out of the gate and say, buy Etsy, you know, before it broke out. We had every anticipation, and this is probably about as good as a chart as you can get to anticipate, you know, this type of a breakout. One of two things could have happened. We could have had we did have our breakout because the trade did trigger once the sellers were cleared out of 10. I think there was about 500,000 shares they were chewing through that day. And then it got to about $10.10, 9 cents, and then just kind of ran out of steam. And that happens. It's one of two cases. You get either some follow through, or you're going to get a bit of a smash back. And it looks like we got the latter, the smash back. But the idea on this one was to at least let the trigger happen, which it did at 10:04. And I want to really talk about risk management, because if you read the emails closely, don't just skim the first line and see what the trade is. I try to remind everybody that risk management is really important. Now I'm going to give you some technical reasons about why. Let's just throw it in there as an orange line. 923, I believe, is the stop, give or take a penny. I fully anticipated, or we fully anticipated, and then in discussing this, that if it didn't pull through, we had to have some sort of a liberal stop to keep people in the game. This became the identifiable level for us right here. As I said, it was making higher lows. We had a nice push, a couple days of pullback, a bounce off of this, and then higher prices. We never really took out that low. So in setting a nice liberal stop, if this had failed, which in fact it did, the idea being that there's probably going to be some disappointment in the short-term traders. So you don't want to put a stop too tight. And again, I want to reiterate, if you read the email, what we say at the end is, here's the stop down at 923. This is not a day trade. This is a swing trade. This is a trade to let breathe. In the bigger picture, it could go higher, and I still think it can go higher because it's still active. We haven't been stopped out yet. But the idea being is to put that stop not only at that level, but maybe a dime or 8 cents below, to try not to be maybe one of the 2 or 3 that get stop hunted if in fact this level does get tested. You know, if it breaks this level, we want out. We're going to give ourselves a little bit of a cushion. So what you got to do on these things is you got to immediately look at, it's not so much what the trigger price is, what's the stop price? Let's say your max loss is maybe 150, 160 bucks. That's the most you can stomach. Well, let's reverse engineer that and work back. How do you buy the amount of shares to allocate that risk to absorb that if we don't follow through, which in this case we didn't, and still remain alive to see if this thing can actually turn and go. So share size, if your max loss is 150, 160, well, that's pretty simple math right now. We got about an 80-cent spread between the trigger price and down here where the stop loss is. So simple math would say 200 shares is probably your sweet spot. And then you never have to worry. Your loss is predefined. If we do wind up getting stopped out, you're not taking a giant risk. And then as you get down here in these levels, you start to get panicky. And then when you get panicky, you start to make decisions and override yourself. And then you get out because you bought too much, only to watch the stop stop out at the suggested price, and then move higher without you. So I really can't emphasize enough on these trade of the weeks. Take a good solid look at where the downside objective is for the stop loss, and size your shares accordingly. Because if you don't, the trade isn't going to really be able to breathe and develop the way we need it to. Would we have liked to see it follow through? Yes, we would have. But this happens a lot on these types of trades. If they don't follow through, they get smashed down. You gotta endure a day or two of backfilling. But I don't want to see it take out this low, which it did. I don't want to see it take out this low, which it did. It hasn't taken out this wick yet, and it hasn't taken out this wick, but this primarily is the wick right here that we're using for managing our risk, plus about 8 cents, a little bit of stop wiggle in there, because trust me, I've seen it before. If you put that stop 1 penny, 2 pennies below, and it does turn out to be an obvious level of a price stop hunt, you're kicking yourself for not going a nickel lower. So identify your downside, identify your maximum dollar loss, and then size your shares accordingly. You got any comments on the trade of the week, Andy?
Well, yes, because we discussed this. Now you actually kind of zoomed in. I kind of want to point out something of interest here. Okay, if you take a look at Etsy right there, and for this month, and I go back on the spiders. Oh wait, are you losing some? You're losing some data on the right there. Some candles.
You're
there
right,
we go.
thank you. Okay.
Yeah, no problem. Now pull up the spiders.
Okay. Well, I'll do them one at a time.
Okay. Now you see the spiders on this pullback it had in the middle of the month there, the big drive down after it tried to go through highs. No, closer to the highs up there for the month. Okay. Then they had a huge pullback there in the spiders. You know. No, I'm talking about just the overall what's happened this month in the spiders. Yeah. Okay, you had a huge pullback there in the spiders. Well, during that time, while the spiders, the overall market was really coming in hard. Now pull up, Etsy. You can see Etsy was showing very incredible relative strength. It was actually going up during this time. That tells me there's accumulation going on. Even though the market was really selling off hard, you had some serious accumulation. I am in this trade. I did not like the action. It was almost kind of felt like one of those things that everybody was staring at it. So, the algos are going to screw around with it and see what, see if they can shake it out.
That's a pretty obvious
chart. I
chart.
wanted to point out, if you go back to that 950 level,
950 level.
Yeah, you see. Yeah, I see the that big red bar going back to the first. That was the day after their last earnings report, which I thought were pretty good. So that's kind of a key level there, because it sold off hard.
It's funny you say that. Yeah. Let's go to the intraday.
Yeah. So it keeps going below that 950, but bouncing and closing above that. Yeah. So
here's our 950 level right here.
Mm-hmm.
And you can see Andy's kind of pointing out a level in the past where it gapped up from earnings. Oh, I'm sorry, I didn't even do that correctly. Did I? Why is that not showing up? Oh, that's a different bar. Oh, never mind. So there's 2 bars in there. I think I did a mistake and clicked another one. Let me turn off my crosshairs, highlight that, and delete it. So yeah, this is the level on. Why is it doing that? That's very weird. Let me move that up. Sorry, guys.
Oh, that is kind of strange. Well,
User error.
Yeah.
Okay, so that's the 950 level that makes sense on the daily. And again, Andy said earnings came out, kind of a gap up. They sold it down, squashed it, Hulk smashed it, and then it fought back very nicely. And then, like Andy said, was relatively very strong last week when the market was falling out of bed. But when you look at this chart, I mean, it's almost too obvious. It's a really nice-looking chart where you have a very definable pivot range. So, it happens. It's not going to be the last time it happens, but because of our liberal stop down here, it's still intact. But again, the intraday range here, that 950 level, got below it a couple times yesterday, but not for long. Popped back up, and then today it held, like clockwork right there on a dime.
Yep.
So that's the trade of the week. It's still active, and I hope that you guys can see the methodology behind letting these things breathe. This is not jump in, and if it goes against you 10 cents, freak out and get out because you got too much size. It's a different animal. It's longer-term position trading. You got to let these things breathe, and we're defining our risk ahead of time. Just like when you buy, an option, okay, I'm buying 2 contracts, 150 each. All right, my downside limited risk is $300, and I can sleep at night, and I don't have to worry about that. Well, aside from a gap down, obviously, it's not quite apples and apples with options contracts, but still, we're giving ourselves confidence and peace of mind to let this thing, breathe when it's not going in our direction. Was this fun to watch yesterday? Hell no. But it's part of the process. When you look back, sometimes you realize, Chase, why couldn't I stay through that? Well, chances are you probably had too many shares. That's why you couldn't stay through that.
One other thing I'd like to add to that, because it's just very important. When you're coming to a huge breakout point like that, especially a psychological number like 10,
Mm-hmm.
What you would like to see before you take on a full position is it trade above that psychological and that breakout point for more than like this did for a couple of minutes. What I would recommend doing is buy a quarter, a half, whatever size, make it small at first, and then you can watch it and see. And what would have been ideal if that thing would have pulled back, held 10.
Right here.
Yes, went sideways for a nice 30 minutes and then popped up out of that. But we didn't get that.
That's what you can add right there. So
absolutely.
There's two schools of thought. You can take the full boat and then just sit in it and maximize. You defined your risk, or you can still define your risk and just take 100 shares on our example of 200 shares. Buy the 100 shares, watch it. If it holds this level of breakout and then starts to move higher, then you add to it and you got your full boat. If it doesn't and it breaks down, well then okay, all right, it didn't work. Let's just try and see maybe where some, maybe down here where you maybe start, thinking about maybe adding to that position. You're not averaging into a loser because I told you you've defined your risk ahead of time. So like Andy said, if you buy a quarter, a third, or a half as a starter position, you're basically just completing your full load. You're not averaging into a loser. That's really the only way that we can think to try and deal and navigate these types of breakdowns and failed breakouts. So it's just something to think about. You don't always have to go full load in and full load out. And that brings us to a good segue here, because we're going to talk about scaling out of good positions. And today, as well as yesterday, the live trading room was killing it in SGY. And I want to show you something. We're going to move on to the Alpha Predator. We talked a little bit about this last week. Really, really like this Alpha Predator window. Let's take a quick look under the hood and see what's going on inside here so you can get a feel. It's kind of like looking for something that's up on all time frames and metrics. So 50 cents is the floor price. So we're catching a lot of stocks that are up under $5 for sure. A change from the close. These stocks have to be up at least 0.2% for the day. The 5-minute change has to be up at least 0.2% for 5 minutes. The position in the daily range, it's a bit liberal, but 70% percentile, meaning no more than 30% away from highs for the day. The volume today has to have at least printed 100,000 shares. And real quickly, if you guys are not aware of looking at these values and you don't quite understand what they mean, get in the habit of using our show me icons, because this is what the server is understanding you to be saying. So you can always check your work by clicking on these icons as well. Change in 5 days. This thing has to be up over 5 days, but just the minimum amount of 0.1%. But then we've got to have explosive 5-minute volume coming in. 400% of normal volume for 5 minutes is pretty significant. So that's probably one of the icing on the cake here to see which one of these things are in current movement. So I want to highlight you on something here. Right now it's after the close, but if I go into the time frame, and let's see what was happening 10 minutes after the open in the live trading room, you'll see that this SGY was picked up by the Alpha Predator. SGY right here. Let's click into that and take a look at today. It's been having a couple of really good days, and today was its blow-off steam day. But nonetheless, on the open, these are 15-minute candles, 15, 30. There's 45 minutes of really nice alpha. And we're being alerted to it at least 10 minutes here into the open. I think it actually came through earlier, 6:35, so about 5 minutes after the open. And if I go all the way into the end of the day, the end of the top of the hour, let's go to historical data. Let's go to 7 a.m. our time. You'll see SGY was still showing up on this top Predator. So this thing was staring you in the face, for the first 20 minutes, 25 minutes of the market. I've been seeing a lot of great movement in the live trading room, and they're finding these moves off of this new Alpha Predator window. So I know that people are going to want this, so before I forget, I'm just going to flat out save and share it. We'll drop a copy of this into the chat window, and I'll label it as such. Alpha Predator, paste. All right, well, the other window that we like to use a lot is the trend change lubricant, which is obviously where we found that Etsy earlier. Let's take a look at what was going on this morning as well. Oops, I did PM. My bad. SGY at the top. So not only was it near the top of Alpha Predator, it was near the top of Trend Change Lubricant. And for those of you who are familiar with this window, this one really likes to focus on the short float. And I conveniently have the short float column positioned right next door to the total float in shares in the float. So we just got a recipe for something that we saw move off the lows here quickly, because 32% of 4.9 million shares, that's a very low float, people. Anything under 10 million shares is going to be considered a really low float. And you mix in a high percentage of that being held by short sellers, and when they don't get their way, you start to get these explosive type moves. So again, the trade ideas technology is really incredible in the way it can identify some of these early morning alpha movers, and it was really nice to see the overlap on the alpha predator window overlapping with the trend change. So and couple that with Barry's live trading room, people calling it out. You know, if you're not in the live trading room, I don't know why. Matter of fact, let me just make a point of doing that. I'll drop a link in there before the end of the close and get you guys a link to the live trading room. If you don't get the link, the live trading room is always available on the channel bar at the very bottom here, live trading room. And trust me, those guys in there, Barry included and Andy included, we're all using this window, and we're using this window as well and a few other ones. So you guys are missing out if you're not using that live trading room. Before I move on, also, you've heard me talk recently, I've been liking my horseshoe alerts that have been kind of coming back to life. Today we had one of each. We had one inverted upside down. Let's take a look at that. And again, for those not familiar, I call this the horseshoe because on an up day, let's start with the up day, we get a gap up, an attempt to fill the gap, and a failure to fill the gap, and to move back higher. So we get this U shape. So that's the genesis and the theory behind naming this the horseshoe alert. And what happens is when this stock goes back to highs, the new high right here would be triggered as that alert and gives you can see there was some decent follow through and some momentum before the market got closed and kind of followed as the market rolled over. You know, this one did as well. However, on the downside, this flipped horseshoe one, really nice one. Look at this daily. They must have had some bad news. They had a really big gap down, a half-hearted attempt to fill the gap, and then it rolled back over, and as soon as it made new lows, the alert was triggered. Some really nice alpha follow through to the downside on this one. So for those of you who've been watching, I've been back testing these. These have been working pretty well. I really like them. I'm going to go ahead and drop these in there as well and just anticipate somebody wanting this. Any comments on what I've been saying, Andy? Oh, you got it on mute probably. Let's see.
Oh, sorry about that.
Sure.
No, that's those. I love those alerts.
This is actually, see, you guys heard me say, you know, Dan came to me back in 2002, 2003 and said, hey, Steve, what would you like to have as the most cool alert if we could figure it out? And this is what I came up with way back when. So this is kind of a timeless alert. Sometimes it works well, sometimes it doesn't, but I'm constantly back testing it to make sure that it's working. And when it's not back testing well, I kind of put it back in the closet. Horseshoe down. I'm typing into the chat window now. There's your horseshoe down, everybody, for those of you that want that. So where to next, Andy? I think we might maybe go through and set a few price alerts and see if we can find some good stuff. For those of you who are not aware, price alerts are part of the premium feature, and they look like such. I like to turn mine off at the end of the month and start fresh again. So these are my June price alerts that I've been working with. All these are triggered, and the most important thing that you can see is that it's a positive P&L. And this is telling me that the price alerts I'm triggering, whether they're long or short, and you know, some of the best trades are long and short here, so we're going both ways. But it's giving me the good feedback that whatever I'm seeing is following through and working for the most part. If it was not a positive P&L and it was a red P&L, I'd be looking to go back and to maybe rethink some of these alerts. But again, clearing these out once a month for me is just imperative, because you don't want to just have a big, long, old price alert in here. You want to just try and clean them out, start fresh, and I like to do it once every month or so. But what we're going to do here going forward is what we call the Holly Trinity, or the Trade Ideas Trinity, which is using our alerts, AI, if that one happened to generate a trade that we like, our top list, what have you. Once we like what we see, we can go into these charts and mark it up. So it will bring that trade to us in real time. And there's nothing like sitting back and letting good trades come to you in real time rather than chasing your tail looking for those trades on your own. So let's start with a few of the ones that I've found in our trade ideas windows here, and then I think Andy might have one or two that he's got from his eyeballs. The trend change lubricant has a sister, which is the flipped version, and I found one that I kind of liked on here. It's Visa. Let's take a look at Visa and why I like Visa. Very similar to what we were looking at earlier with Etsy and all the other ones doing the trend change lubricant, trying to come out and break their downtrend. Well, this particular one is kind of the opposite. It's looking for stocks that are kind of trying to break their uptrend. And what we see here is a very definable pivot level, which I'm going to go in and kind of just show you with the crosshairs, just below where we are coming out of consolidation here. So on these ones, I don't want to see a lot of red bars that you want to chase, because more than likely you're going to be the last one to the party and probably short the low and get bounced back up to this level. But we haven't broken this level, and if we do, I'd like to know about it. So I'm just going to look at that wick, look at the low, 76.22. We right-click inside the chart window, and I'm going to go 76.21, and this is coded for a short. I'm going to do trend change lubricant short, so I remind myself where this came from. So if it does pop up, I will know that this is where I found that particular alert. Another one that I liked on here, let's see, where was it? It's going to be going down to another one. We're going to go down to our bearish piercing. And this is one that I use, if I just double click on the first one, red hat, you can see that this requires a minimum of 3 days up movement. Anything more is fine. This one has 4 candles, obviously. And coming down, the red candle is beginning to almost engulf that prior candle. What I really like is that wick on the upside, showing that the sellers were exhausted up here, or the buyers were exhausted as the sellers came in. These can be great setups for like a 1.5 to 2 day trade, just to try and maybe catch a quick pullback. This one, as you can see, has already been triggered by the green line. This one was set by me earlier today, and it looks like it triggered but pretty much closed right exactly where it did. But there's a few more on here that I do like. SYMC, Symantec, boy, we had quite a move. We had 1, 2, 3, 4, 5, 6, 7, 8 days of up move before we got this piercing red candle. And the reason it's called piercing is it's breaking back down into the prior green candle with a red-bodied candle. So there could be some fallback, maybe down here to this $20 level, maybe a day and a half of decent fallback, but I'm going to mark this one up as well. So we have a low of 20.77. We'll just create a price alert. It's short, and we'll go 76. All right, so I'm going to remind myself I got this off of Bearish Piercing. I didn't spell that right. All right, Bearish Piercing. So that one's in the mix. All right, what else did I like? I liked Rare, which was also on AES, excuse me, AES, which was on this one. Again, 1, 2, 3, 4 nice big movement days, and then kind of a little narrow range spinning top here. We did have a bit of an attempt to sell off, but it pulled back up. But this candle is so small, I really think there still could be another attempt at this low. So let's take a look at that low, 11.94. Price alert perfect, 93. Bearish piercing alert. Okay, and I think I had one more, which was Rare, and I'm trying to recall where I got that one from. Where did I get Rare from? Where did I get Rare? Ah, the one and only bullish piercing, which is the exact opposite.
Yeah.
So, really nice days, almost like a red bar ignored there on the daily, but it had a green bar, excuse me, had 2 green bars and then some more follow through. But normally, you guys have probably heard me say I don't like that giant wick to the upside and that wick to the downside. But when I go in here and maybe take a little bigger look, this 50 level, which is where this wick stopped right here, which is this wick right here. Let me turn my crosshairs back on. That's where that wick on the daily stopped. Well, it really corresponds with prior support. So this is identifying itself as a really interesting pivot level that was tested once. Maybe it'll be tested again, maybe it won't. But if it is going to be tested again, I do want to know about it. So we're just going to go basically at 55.01. We can do it directly from our 15-minute chart here. And we'll go 55.01. And of course, this was created from the bullish piercing. All right, so those are the ones that I have of note that I've now dropped into my price alerts and which I will share with you. but I want to check first with Andy and see if he found anything on his own that he wants to mark up.
I tell you what, the ones, most of the ones that I had, you mentioned them already. There's not a whole lot out there. I mean, in this environment, yeah, I'll do my more homework tonight, but the ones that I found on Holly, you basically went, not Holly, but using the trade ideas, you've basically went over them, dude. It's there's a couple I'm going to be watching. M's is a potential short after that big wick today to the upside, and that shooting star up there. You got a couple of potential wicks. It's not showing up on any scanners yet, but just on
I like that. I think this would be the level right here. This was today's 15-minute low, right? If you're going to set maybe a beginner alert, let's just go ahead and do that. 11:01.
Yep.
Short.
Exactly.
Okay. Eyes. Okay.
Yeah, that's something. That's one that maybe popping up on the reverse trend change lubricant here pretty soon. But when I see like the double, like you call them goalposts, Steve, right there. The two wicks up there right around highs, could be
double rejection.
Exactly. But for the most part, you hit on the ones that I'm seeing as well. Of course, we have a lot of the same alerts, but
and we talk throughout the day.
Scans.
and we talk
throughout the day, of course.
All right. So that said, we did set one alert. I'm going to go ahead and just show everybody real quickly the price alerts created. Let's sort by created. Actually, let's just turn them off here. Triggered, only working. Created. Here's our date today, 6/22. Go ahead and highlight those, and these are the working alerts that we have set. So for those of you who can receive this and have the Trade Ideas premium package, I'll drop this in the chat window. And for those of you that don't have it, this might be a good reason to consider getting it. Share 6 selected price alerts. So this can become a real powerful tool when you've got somebody that you trust and and you maybe want to get some different ideas for stocks to watch in your arsenal, in your wheelhouse. This can be a great use of the cloud collaboration feature to share great setups with everybody. And when they trigger in the exact same time to everybody. So here's my watch list, price alerts. I'm dropping that cloud into the chat window right now. So those of you that have it, the codes for bearish and bullish, I did. They're in there. Gacian, if you just go back a little bit, scroll back a little bit higher in the chat window, I have identified those for you. So we're good to go. I think I've shared everything I wanted to share. We've dropped everything I can into the price into the chat window. Why don't you come on in, Scott, and let people know a great way to maybe upgrade if they don't have it yet, or if they're thinking about buying just the Premium Pro Basic. We've got some good codes for you tonight for listening to our webinar. Come on in, Scott.
Hey,
you on mute, Scott? There you are.
I was on mute. Yes, good guess.
Gotcha.
Yeah, thanks for the great presentation. So if you want to go ahead and throw that slide up that's got the price stuff, we are a software as a service company, and we have 2 tiers of service. It's either the regular or the premium, and it's $9.99 for the regular per month, or $188 per month for the premium, $888 per year for the regular, $1888 per year for the premium. Major difference there, of course, is access to unlimited backtesting, our AI, Holly, and other features like price alerts and green bar ignore, red bar ignore, and that kind of premium stuff. So to thank you for coming, that code that you see, it has to all be caps, just like you see it, trade of week. You go to trade-ideas.com/price and select your plan. Use that code on checkout. It takes 15% off your order total. So you can get your first month or your first year, which is really the best value. You do $18.88 per year, take 15% off of that, and then you just renew at the regular rate. And there's never a contract with any of these either. So if you have any questions also, let me direct your attention to your handouts panel. I have that exact same information, and this contact information, this card with how to contact us, is also on that handout. So you go to the handouts panel, click on that PDF, download it. You can follow Steve at Today Trader. He's on Twitter. Trade Ideas 1 is Dan Merkin, our CEO. We also have Trade Ideas. Facebook.com/Trade Ideas Pro is where you find us on Facebook. If you're on Facebook, you should like us there because we post updates to some things we don't post in other places. Good place to check that out. Best place to go for help is info@trade-ideas.com. That goes directly into our Help Scout software and is routed to the appropriate person. Billing issues during business hours, you can call us at 619-821-8198, but that's not for technical support. You can reach any of us. I'm Scott at trade-ideas.com. Dan is Dan at trade-ideas.com. Andy is Andy at trade-ideas.com. And Steve is Steve at trade-ideas.com. So just reach out to us. But for general help, technical issues, info@trade-ideas.com is the best place. Thanks everyone for joining us. I hope those of you that are not on the premium yet do upgrade, and those of you that have not joined us as subscribers do. We'll have another webinar tomorrow. You should be getting invites for later this evening or tomorrow morning, and that is the trading room, and I believe that's going to be Steve and Jamie. Andy may be joining us too. Although Jamie is kind of not entirely back from vacation, but he might be. Steve, do you know if he's
there?
He'll be there. He'll be there. He's all set up in Texas for the next couple of weeks. He's working remotely.
Okay, yeah, I knew he was. I just wasn't sure if he was making all the meetings. Awesome.
Yep. No, he'll be there.
All right. Cool. All right, thanks everyone. This recording will be up later tonight or tomorrow morning, and you get an email about it. Thanks for joining us. See you at the next webinar.
Thank you.